Hello, everyone. It's been a while since I was doing podcasts. Now hard times and had not so much free time. But I'm happy to be back. And today we have a conversation with Jayden Sage. Jayden, I've been doing several podcasts with Jayden. You can find them on this same channel. Jayden is early Bitcoin adopter, early crypto adopter, and CEO of Global Crypto Council. And I was happy to meet Jayden in Kiev several times, and I hope you will come to Ukraine too. So first, my question is, how are you, Jayden, and what do you think about crypto market these days? What's your view?
All right, thank you for having me, Andre. I'm doing well. I'm actually on the road. I'm in the car, so apologies for that. And it's very bright here in Florida, so I have my shades on as well. So sorry for that as well. But I'm doing well. Crypto is doing well, and at the same time, it's not doing well. So we can do a little bit of a deep dive as to what are some of the underlying dynamics that are playing within the blockchain space at the moment. Whichever way you want to talk about it. If you'd like me to start, I can start.
Yes. It's just firstly, our channel Crypto Text is not about. It's not giving financial advice. You know, this phrase is popular. I'm not your financial advisor because investing is risky. But not only in the cryptocurrencies can fail. We can see other goods and services fell in price, and other things like stocks prices fell. It's just now a lot of people don't understand, is it bear market starting, or bull market starting, or bull market ending, or is it some kind of pause? What is your feeling? What are your feelings?
Yeah, so I think this is the first time in history we've achieved something unique, which is we are currently in a bull market and a bear market at the same time. So we're living, I never thought that I'd actually say that on an interview that we're doing both. So let's break that down a little bit. So you've got the, out of the blue, kind of out of the blue, Bitcoin started jumping and jumped to 70,000. And I know a lot of us were kind of waiting for it to keep retrenching so we can buy a lot more, but it just went up primarily because of the ETF and the halving, and some other underlying factors. So it's gone up, but it doesn't this time around. And everybody in the space who's kind of connected can testify. Even if you just go to conferences, it doesn't feel like the same level of a bull market, right? So in previous bull markets, when you had a bull market in Bitcoin, it was followed by a bull market in altcoin when Bitcoin stabilizes. So the traditional way it's worked is that Bitcoin has its upward trajectory, and then Bitcoin stabilizes, and then once it starts dropping a little bit, you have altcoins, cycle that kicks in, and people make money in the altcoin cycle. But we don't really see that this time around, and the gyration is kind of large because we went to 70, then we went down to 56. Now we're, as of today, we're somewhere in the 60s, low 60s. But it doesn't feel the same. I mean, every conference that I've gone to, or the ones that I speak at, it has a different vibe. You don't have that same feeling. So how could that be? Like, what's actually going on? So part of it is because those who are invested or remained, here's what happened. A lot of us kind of pulled back, retrenched. When the market went down, we kind of went cash. So those who stayed and actually bought at a good price, not as part of the upward trend of the market, but bought pre, maybe in 2021, or if they got into new projects that went up, 2022 stacks, or ordinals. So some of those projects they probably got in at good time periods, but a lot of us were waiting in cash, waiting for the market to continue to go down, and then it just went up, right? So now it's back up. So a lot of us are still sitting waiting in cash. So for us, it's kind of like we missed this cycle. Now, if this cycle continues to bear fruit and keeps going up, then we're going north of 70, which we already touched. And the problem with that is we don't have another halvening event or an ETF. So what's going to drive it, right? The only other thing that can drive it is a looser monetary policy. Now, with inflation not subsiding, at least in the U.S., it gives no reason for the Federal Reserve to lower the interest rates. If anything, they're just going to hold it, and they could potentially hold it here. It's at like 5.25 or 5.75. They can potentially hold it here for the entirety of the year. While they'll keep saying, yes, we're going to reduce, yes, we're going to reduce, we're not going to raise. But if things change up just a little bit, then they may choose to raise the interest rates if inflation doesn't subside. And if they don't do that, at least they're not going to give the three interest rate dips that they were, the cuts that they were going to do. So what does that mean? That means short of another inherently blockchain related event occurring, then the monetary policy will not allow altcoins or Bitcoin or any cryptocurrency or any asset class for that matter, including stocks and other asset classes, to continue in a running up manner. So either we're going to stay here stagnating, or we're going to start to slowly go down because people realize that the Fed isn't lowering the interest rates. So some of the melees that we're seeing in the blockchain space, you can also see it in Nasdaq. You can see it in the stock market as well, where some stocks are going up, some stocks are going down. Like it's like where are they going? Like, you know, some are going up, some are going down. So even those of us who are still in the stock market, like wake up every day looking at within even our holdings, we're seeing like a fork, right? So you have some that are going up, some that are going down, even within the same sector. So it's kind of like an unusual place where we actually have a bear market and a bull market simultaneously operating.
Yeah, I see. Thanks for the interesting thought. And these two events which you mentioned, halving and ETF, do you think they really influenced? Well, ETF, a lot of people were saying that this was a very big driver for the price. Maybe can you explain to our viewers who are not necessarily watching it how it influenced and why, and what are
Yeah.
ETF?
So
Because
ETF stands.
the halving we understand that there is like less Bitcoin produced after halving event, so people were really expecting. But for me, also interesting opinion that I was driving in Ukraine, and I had a BlaBlaCar passenger who said to me about halving, and who said to me that do not sell your crypto before halving. And then I thought, like, okay, even if the people from completely non-related areas, they think and they know about halving, and people expect that often it can be like vice versa. You know this because a lot of people are expecting, and actually when halving happened, that's not so impressive change of price.
Yeah, because every having now is taking less and less of the Bitcoin. There's less volume in there. So they're not gonna matter as much as they used to. Now, as far as the ETF goes, ETF stands for exchange traded funds, right? So it allows people, mom and pop on Wall Street, to go in and have exposure to Bitcoin without needing a wallet, without having to worry about security, without having to, see that like they don't need to memorize any, seed phrases or anything. They just basically buy the fund, and the fund holds Bitcoin. So it makes it easier for the rest of us not blockchain people, but the rest of the populace to go in and buy Bitcoin. So then people can have exposure to Bitcoin. So that's a very, it's way greater than the halving. Uh, very solid narrative and reasoning why Bitcoin would go up. So primarily that was the fundamental reason why Bitcoin went up to 70. Now, what's going on? One of the things is that in the ETFs, how much order flow is there? Is there sufficient continuous order flow to facilitate going to 100,000 or even maintaining here? Because if the order flow goes down and there's more sellers, then there may be that dip. And I think that's the price discovery we're caught in. So like, okay, first we went to 70 in anticipation of strong order flows through the year consistently. Then we saw an order flow drop. And that's why you saw it drop from 56,000 to 56,000. Why? Like out of the blue, why did it drop? Because the order flows dropped. So on the side, this is something for us blockchain people to note, is that now crypto, I've been saying this for a while now, whenever I'm speaking in front of an audience, is that we are no longer the rebels as much. We are becoming an industry like TradFi, traditional finance. We're also just becoming another industry. We're getting on the same bus of asset classes that people invest in, because now everybody knows Bitcoin, everybody knows Ethereum, everybody knows all the top coins, and people add it to their portfolio mix. So we ride the same bus, ride the same waves of monetary policy that affects other asset classes will affect Bitcoin. So to give you an example, in the past, if interest rates were up or down, Bitcoin enthusiasts would still be buying, right? So they would be buying, or if there was a retrenchment, it was based on intrinsic blockchain or Bitcoin or crypto related community psyche. Now it's no longer the case. It's just an asset class, and it's tied into the psyche of the entire populace, and the entire populace's psyche is tied into not just, to a smaller extent, geopolitical, but at the same time, the economic cycles or wherever we are. If we're in a recession, if the interest rates are, if it's loose monetary policy or if it's restrictive monetary policy. So for the foreseeable future, I think there'll be the legacy coins, which will operate just in the manner that I just described. But then some of the newer coins coming out, they will still be reserved for just us, right? So a new coin comes out or a new layer one comes out, we'll be aware of it, but the rest of the populace won't be. So we will have more of an input, more of a say, and more of a contribution to the price discovery of that layer one or those coins. But we will not have it for Bitcoin. We will not have it for Ethereum. The larger coins will just start to ride the cycle. There's a lot of talk in the US about releasing an Ethereum ETF. So if Ethereum goes the same route, and then possibly some of the other legacy coins go that route, they're done. I mean, they're just going to ride the cycle. So that's just now a fact. It's a train in motion that's going to continue.
Yeah, and in addition to ETF and halving, what do you think? And according to your experience, not only from US, because we know you travel a lot, and you've been to many events this year and last decade, at least. Do you see the continuous increase of crypto adoption? I mean, because even I can feel it in my area of communication, and I'm not meaning the crypto area, because crypto area is one thing. Of course, people keep their interest, because those who left crypto space, they left crypto space a bit before, and some people leave, some come, but I mean that the broader audience of different young people, older people, different professions, different nationalities, for me it seems that there is a bigger interest in crypto. Some do it for savings, some check different projects in a little bit of gaming, or some new projects, now it seems maybe airdrops are a trend, and because airdrops is one of the way how projects attract their users. And for me, it seems that more people are coming to crypto. Of course, most of them are not big investors. They are not even big participants, because when we speak about crypto as any other industry, to be deep there, you need to dedicate a lot of time, and most of people can't dedicate a lot of time. Some are lazy, some just don't have time. But for me, it seems that more and more people are becoming interested and buying some
Mm.
crypto to the different extents. What's your opinion?
So there's a lot to unpack in what you said. So I'll just try to follow the theme. Um, Gone are the days when we were kind of an exclusive club, where we spoke our own lingo and nobody understood what we were saying. Those days are gone. I mean, I could step out of this car right now. I'm parked at a gas station because there was a good internet here. But if I walk into that gas station and I mention some of the legacy coins and stuff like that, people will know. The cashier will know. The person grabbing a soda in there will know. The guy pumping the gas will know. That's a lot of different people knowing about blockchain. So for all of us who thought we were in an exclusive club, to a certain extent, that's all gone. So that's the first part. I mean, so we, like I said, we've joined the bandwagon of another being another asset class. Um, but there's a lot of different ways people come into the blockchain space. The masses are just going to come in as users. So are you a user, creator, developer, somebody, a supporter, an advocate, somebody who does brand awareness? Are you into the marketing side? So there's so many angles you can come into blockchain. So as a user or as an investor, everybody can come in, right? So everybody can now buy them on an exchange or even through these ETFs and say, okay, I'm going to remain safe and I'm going to add it to my asset classes. So there's a variety of ways that people can come in as an investor. Now, if you're referring to them coming in to join a project and help that project either through marketing, through brand awareness, through community support, through development as bunch of devs, all of that will continue, but it'll always remain a smaller and smaller submarket. Think of it like any other industry. I mean, how many people use social media and how many people work in social media? I mean, in creation of those apps, not like, okay, well, content creators. No, I don't mean that. Those are still classified as users, right? So, or better example, like look at Google, right? So you have a traditional FANG company. How many people work at Google and how many people use Google? So the same thing, like we the core community winds up being the ones who keep coming up with innovation, putting new products, putting new apps, coins out there, or new layer ones possibly, and then an entire ecosystem built off of that. But we're still a small community in that sense. After a while, you kind of know, the landscape and the people. It's not gonna keep adding tons and tons of people on the creation side. It will on the user side. So that trend is already continuing and will continue, where there'll be an influx of people. Now remember, every time we have an upcycle, you do see all these people coming in, but a majority of them are just there for either investing or speculating or finding a way to know the inner information so they can ride the wave of a particular coin or a particular set of coins. So they're not coming in guns a blazing trying to become contributors to the space, other than just finding the coins that'll help them 10x or 100x. So those people come and go with every bull market, right? So all those type of people, the investor class, speculator class, comes in with every bull market, but who stays during the bear markets are the true advocates of crypto, and they are always, to a certain extent, a consistent group who actually understand the blockchain technology. A lot of people coming into blockchain technology don't actually know what blockchain is. So when the market goes down, they just classify it as a Ponzi scheme and look to get out, right? Like, oh, it's a Ponzi scheme. Well, yes, no, but like, all asset classes have gone up, especially like, stock market's up. real estate market is up. You try to go buy a car, it costs 30% to 40% more, maybe even 50% more than it did pre-pandemic. It's insane. The pricing is insane. So is the car market a Ponzi scheme? Is the real estate market a Ponzi scheme? No, they're all hyperinflated primarily because of the monetary policy that was put into place primarily because we had a pandemic, a once in 100-year event, and nobody knew. And there was really no way to figure out what to do. Hindsight is always 2020. So now we look back and say, oh, the loose monetary policy caused all this inflation. Well, if if the loose monetary policy wasn't there, we would have all potentially have gone into a Great Depression that was greater than the Great Depression. So like now looking back, everybody has an opinion, but back in 2020, March 2020, when everybody was huddled inside their homes trying to figure out what is the world going to come to an end, perhaps the looser monetary policy facilitated our ability to ride through that pandemic. And if the policymakers didn't do that, then maybe we would have all been hit by a bus. So, looking back, it's always easy to be critical, but at that time, it was probably the best set of actions that could be taken. Now, the debate can be how much loose monetary policy should have been implemented in order to get that right. Well, I mean, we don't have pandemics once every decade. So, the regulators could have come up with the exact amount of money to put into the system. This is a once in 100-year event. So nobody really had an idea as to how much money needed to go into the system. I'm not defending the monetary policy. I'm just saying we need to take it with a grain of salt and not auto default to, it's just the monetary policy. Well, maybe the looser monetary policy contributed to us not all falling off the cliff. So we have to take it and balance it all out. And now we're on the other side of this where all these assets have been inflated and we don't know how to deflate them because we're also slowly, as this inflation continues, we're also slowly getting used to it, right? So, a cup of coffee instead of in the US costing $1, now it's costing, $4.95, so it's like $5, but you psychologically hear that four and you're like, oh, it's okay. It's not $5 yet. It's 5 cents off. So, this is kind of like the psychological tricks we play. But can it go back down? Maybe it can go down, but that will require us to have strong deflationary event, which basically means a recession, a massive recession. So are we ready for that? Are we okay with a recession of that nature? That would, by the way, bring down Bitcoin back to 5,000 or something. And do we want that? I don't know. Some people will want that. Some people won't want that. So it's kind of like a mixed bag. It's like trying to separate the egg from the omelet. Good luck.
Yeah, I liked your analogy with social media. One more analogy came to my mind as you are sitting in a car and mention cars. So it's like in the cars. A lot of people drive cars. There's from all countries, there is like insane amount of cars. But of course, if we see that much smaller amount of people really work in the car producing companies. But also if we take this whole industry, some people work at as let's say seller offices which sell cars, some people resell cars, some people work in this mechanic stations. So this really a big industry. And in analogy with crypto, more people will use. So it's like maybe soon will come to the times when almost everyone will know about crypto and will use it like a car, because the main goal of the car is to transfer people from one point to another, or sometimes also transfer goods. And the same with crypto, the main idea is to transfer value from one person to another, transfer funds. That's only one of the options, of course. But the same with cars. Some people buy several cars just to be maybe fancy cars uh, to show their status, or some people might find it as an investment to buy a car. Then you mentioned that they are raising in prices, then resell it or modify. But continuing this analogy, what also came to my mind that what is really good idea, maybe not to just uh, to have a car and the possibility to transfer yourself from one place to another, but if you really like this industry, just try to find yourself in the car company, because the ones who design, produce, invent cars, they will always be in a good shape and will do something interesting. And the same, it seems for me, that the crypto industry is keeping going, inventing more, improving. What's your idea on
Yeah.
this?
Yeah, I mean, you're dead on. I mean, if you're on the production side of anything, if you're on the user side, you're a net consumer. You don't have the requisite knowledge of what's about to come out. You have the knowledge of what already came out. It's kind of like YouTube, right? Like, so people are like, I don't need to go to conference in blockchain. People will be like, I don't need to go to conference. I just get all my content from YouTube. Well, yeah, you can, but you're reading yesterday's newspaper. So what's about to come online is not necessarily going to be always on YouTube, right? So a set of people have to already have been talking about some new wave, some new tech, some new stuff going on within the crypto space, and then somebody will put it out there on YouTube and say, "Hey, I heard this." But the ones who took who were able to profit or be able to get in early on some of the technology will be the ones who are actually in those spaces, who are there. It's not gonna. So if you're gonna be on you, if you're gonna derive all your information directly from YouTube, you're risking some great opportunities that you're gonna miss out. So hands down, as an investor class, you miss a lot if you're not in the pulse. So you kind of always need the pulse. And there is nothing like the blockchain space as far as people coming together, trying different ideas, and being able to grow from there. Like in other industries, they'll have like maybe 10 events, 20 events per year. 20 events. Like, if you're discussing, say you're discussing artificial intelligence, which I'm a part of. So like, let's say you're talking about artificial intelligence, they'll have 20 big events. That's it. Maybe hit 30 if you're talking about globally. Big ones. I don't mean meetups. That's it. It's a small amount. Now think about blockchain. In blockchain, you can't count the number of events. So what does it mean when you're having all those events? It means that there's an insane amount of dialogue occurring between innovators who will then try to figure out ways to make their products better. Blockchain, unlike regular tech, could not have been created in a garage. So we always hear the story of Steve Jobs and Steve Wozniak went in a garage and came out with something awesome. That can't really happen in blockchain, because you need to be able to figure out some important elements of your business model, and that can only be done through collaboration. And that collaboration only occurs when you go outside of your circle. If you're going to be within your circle, you know what they think, you know how they think. It's when you go to another place and then you hear an alternative viewpoint or an alternative way of doing things, that's when the innovation can occur at a faster rate. On another note, or a related note, I just want to say that anybody who thinks that blockchain is done is not understanding how blockchain actually works. Blockchain will never be done. It can never be done. It just keeps branching out into so many different things. I mean, we have DeFi, we have NFT. Because the most important concept within blockchain is not Bitcoin. As much as we think it's Bitcoin, it's not. It's the concept of decentrality. To be able to invert the pyramid, power to the people, contribution by the masses for the masses, is a concept that resonates deeply within us, but we actually had no way of implementation. Blockchain facilitates that implementation. So we're still at the very early stage, believe it or not. We're still at the very early stage of the contribution of blockchain to society writ large. It's going to continue, and you're just going to see more and more industries getting the blockchain effect, which is the decentralization component of it, nodality, immutability, cryptographic discernment, cryptographically capturing information where it's not being able to be hacked. So those concepts will continue, and blockchain will continue for another decade, 2 decades. There's only one thing that can stop it, or not stop it, but impact it. But that's down the line. It's called quantum computing, but that's a separate issue. That's a separate problem. But it still won't take away the decentrality. It'll take away the cryptographic nature, or break cryptography, but then we'll find a way around it. So it's just the Y2K problem. If anybody's been following the quantum computing space and saying, oh, quantum breaks cryptography, yes, but it's kind of like the Y2K. If you make your your code quantum proof, then you'll be able to get over that hurdle and continue on your merry path towards the decentralization aspect that you're trying to build in to your business models today, tomorrow, and in the long-term future.
Yeah, to continue your idea on decentralization, what do you think? And it seems for me that one of the future trends or current trends might be DAO, decentralized autonomous organization. Like we might remember there was an DeFi, NFT trend, metaverse trend. They still exist, these things. They probably are very far away from big adoption because still you see that not so many people are using NFTs. Not so many people know what are DeFi and not using it often. But DAO, as for me, it has much bigger perspectives because firstly, it's technically it's more understandable because that's decentralized autonomous organization. It can have multiple existences and multiple ways of participation. If somebody is just committing, for example, joining it in a way as content creator, he or she might get some tokens as rewards and have some role which can be placed and can be displayed in like a token owner or in this crypto. Well, firstly, secured by cryptography and openly existing on the blockchain. So if you, for example, let's take the aspect of voting, of it's everything might be clear, open, transparent on the blockchain. And some DAOs might be like very big and complex. I observe some of the nowadays existing DAOs. Some of them already grew with a little bit of bureaucracy and other, because as somebody said that democracy is very expensive and slow. But that's interesting because they can exist. Every person can form a DAO. Remember when we were in Kyiv with you and some other friends, we almost formed a DAO in few hours, and who knows, maybe we will do it. But as a trend, and as for me, it looks that for many people that's understandable concepts. That's just the way what well, many people say that crypto is bringing power to the people, more freedom, more control of your data, of your transactions, of what do you share. and how the particular, is it a legacy coin, because many legacy coins have DAO related or made on top of it. We remember the first DAO was made on Ethereum, and that interesting period of DAO hack. And now there are more and more DAOs, and people can create it. Will it be a trend, or is it now a trend? What do you think?
Well, look, well, let's step back. People, even in the industry, right? People have been like kind of smirking regarding Web3, right? Like, oh, metaverses, haha, like it didn't go anywhere or whatnot. The concept of living inside a virtual world was is old. It stems all the way back to 2000, 2001 with Second Life, there.com, and some other these communities that were built back in the day. And now people are like, oh well, that fizzled out and that's not going anywhere. But what you really need to capture with NFTs taking over art, I went to I go to Art Basel in Miami, and during the last upcycle, majority of it became like Bit Basel, right? So there was so much NFT related art that was birthed, and when I was just moving in that circle, those artists didn't know DeFi from a hole in the wall. They didn't know what the dynamics of Ethereum is, what the Lightning Network is. They were just using the technology to empower themselves to be able to capture value as an artist for their art without it being lost to some art dealer or some middleman, right? So that's not going away. That's going to continue. Blockchain being this denominator industry, decentralization will keep going after different industries. Will it work the first time around? No, it didn't kind of work for the metaverse space the first time around, but there will be innovation where it will be tackled again. That's the equivalent of saying, you're going to take a hill, and if you fail, then you're never going to take the hill. It doesn't work that way. There's incremental improvements, and all of a sudden, then you take the hill. So this is going to continue, and all of these ways that the different branches of blockchain are splintering and separating, they're just going to continue because the whole concept is decentralization. Now, people are like, it's not happening fast enough. Well, when was the last time you had decentralization as society? The last time you had decentralization was approximately 15,000 years ago, before what we say the birthing of civilization, right? Like we consider that the cool, sexy moment where humanity had an upward swing, but that was also simultaneously the birthing of the centralization component, which meant that you had a ruler, a king, who was like subjugating all these people and telling them what to do, whether they liked it or not. And if they didn't pay the taxes outside of you becoming Robin Hood, you were dead. So this trying to invert this pyramid and making power to the people. The people had power last time when they were in tribes of hunter-gatherers. That's when they had real power. When we gloss over the negative parts of civilization, where we can say, we think of the glory of Egypt, the glory of Sumer, the glory of Rome. They had a pharaoh, they had a king, they had an emperor, so I'm pretty sure Julius Caesar and his kind were not so kind to the masses, because we gloss over that in history. I mean, remember, they were throwing slaves to the lions in the Colosseum. So there are a lot of people suffering during the Roman Empire, as they do in many, many empires. So decentralization is trying to take on something that's been caked for 15,000 years. And if you think that's going to happen in the grand total of the lifespan of blockchain, which is 15 years, so you got like approximately 15 years. So you got 15 years where the other side has 15,000 years. And you think it's going to change that fast? Of course not. And these are social constructs that we've been conditioned in to for generations and generations. It's going to take time. It's like take a chill pill. It's going to take a while, and but the train has already left, and it's continuing. And you're going to see the permeation of blockchain in so many different industries that you can't even think of yet. But it'll continue onwards. Just think about it, Andrea. 5 years ago or 6 years ago, who would have thought that the NFT concept within art will do what it did already? So, and DeFi is still trying. People say, well, DeFi is challenged as well. Maybe the technology isn't there. The technology is there, but there's an existing system there that, in some ways is already entrenched, and that's going to take a long time to change out. So it takes time. Good things take time, and blockchain is going to be no different. So it's going to take time. I think we're spoiled. I think this recent technology has spoiled, especially with the mobile phone. The smartphone just made us think that everything happens like that. So it doesn't. It takes time for things to kick in.
Yeah, thanks for interesting words. And regarding DAOs, do you pay attention to some like particular projects, maybe any to mention? And also interesting that, well, for me, if somebody is looking like where to find some information or find new friends, colleagues, new people who share the same interests, then DAO is definitely a good idea. So just to be, as we mentioned, not on the only user side, but on the creator side, because in DAO you can be co-creator and you can be owner of a DAO, co-owner. Then that's definitely worth of it. If it's speaking about just investing in tokens of the DAOs, well, it's also for some people it might be, because we don't know how the price will go, it might be profitable. And if DAO will be the trend, some people might invest in this area, especially the DAO related projects. They often do the airdrops, for example. Just to, when DAO is starting, it can do some airdrops for active users. Any of interesting DAO projects you can mention?
Yeah, I'm not particularly focused in on the DAO, so I wouldn't be able to talk about individual projects. But one thing is very important, that within the DAO ecosphere, the sky's the limit. Like, it depends. You got to come at it with not, for somebody coming into the space, it has to be done from a perspective of what your strengths are. Don't try to come into the space and say, I'm going to build strengths. See what your strengths are, and then you could either contribute to a DAO or you could start your own DAO, because it's easy to start and then you can go from there. So the DAO ecosphere is also quite new and can do a lot of things. And then, of course, it also has a token component. But also remember, Andre, that different regulations in different countries facilitate or require you to check what is allowed in your country and what isn't. So, in one country, you could put together a DAO and release a token, and you'll be able to, sell the token. In other countries, you just can't. So it's important to know which jurisdiction you're operating under in order for you to take advantage of DAO. And if you're in a place where that's limited, then you need to be able to think of a concept or something where you're not limited in those ways. So there's a lot of flexibility now within the blockchain space, but you just got to be aware. You also don't want to run into legal problems because you decided to release a token and you weren't allowed, or it wasn't allowed within a particular jurisdiction. So it's quite important to take advantage of that. And for those who are not under the jurisdiction, such jurisdictions where it's limited, then, and if you're not coming up with some amazing projects, then that's on you. You know, you need to be able to take advantage of your local opportunities and be able to build something amazing that the rest of us can benefit from. You know, so as much as we think we're all separated, we all benefit from the contribution that we provide to each other. I mean, we're using a service right now to live stream that neither you created or I had any hand in, but we're beneficiaries, and hopefully our audience is a beneficiary. So our contribution is quite large. It's just that we don't see it. So we only see it from the ones that are on the news or whatever, and we think, okay, they contributed, I didn't contribute anything. No, it's not true. The concept of one mind animates 1,000 bodies. So you can, your contribution does not have to be something that's tangible that you have to see. You are contributing, and it's important for people to realize that, because when they're coming into a new space and if they're bringing a unique perspective, that alone is an amazing contribution, because we all get siloed. You and I will probably look at things the same way again and again because we've been in this space for so long, and here comes somebody new with a new perspective, and they drop a new thought on us, and we're like, wow, we didn't even think that way, because we're just so focused on thinking a particular way. So we kind of always need people. A lot of times, another thing that I've always seen is non-blockchain people also look at people in blockchain and say, oh, it's so intimidating. Like, oh my God, I feel intimidated. And I'm like, what? This is the most open environment, very receiving, very open. People want you to contribute. People are there to teach you, help you, guide you, nurture you through. And, people feel intimidated. It's not the case. And we need new ideas all the time. So it's great if more people come in and contribute. And it's probably your viewpoints that you think won't be valued are the ones that will be valued, because those are the ones that are going to help to build a narrative or work around, to round out the edges and build some amazing product and projects. So, it's never feel intimidated. Always feel like you have something to contribute, and your contribution is always valued.
Thanks for wise words, and I think I hope they can inspire some of our viewers. I think the last question would be, you mentioned the events and you travel a lot. I really miss this traveling and crypto events part. When a few years ago I used to travel more, and any particular events this year you would like to mention, or any any some particular parts of the world or cities or particular events which are you going to recommend maybe for our viewers? And I completely agree with you that visiting events, that it broadens your picture. From my experience, visiting events, it doesn't necessarily bring some value which you can count, because right now a lot of information and communication, it happens even like we speak like this distantly. So in order to be a good investor or serious project leader, you don't necessarily need to be traveling and meeting people in the real life, but it definitely broadens the picture. What's your view and particular events?
Yeah. Yeah. First of all, I mean, look, we're living in a fantastic time as far as that's concerned, right? Like, we can get together, our teams can be decentralized. We're all to a certain extent now digital nomads, even those who work for large corporations, you can work from anywhere. So who would have thought, right? So a few years ago, who would have thought that we'd be able to do this? Even you and me right now are in different parts of the world, different time zones. Obviously, you look, there's sunlight behind me. It's dark where you are. So, we're living in a world where we can tap into different minds. But there is something to be said. I will say this: there is something to be said for real life, real world connections. While all this technology helps us to be able to continue the narrative with people that we have, with like-minded people. But at the same time, people had to meet each other first time, right? So you and I had to meet in real life in order for us to feel comfortable knowing that, hey, this person thinks somewhat like me, and I kind of want them to be in my circle, of professional circle, right? So this is important. Events are important. Events are happening everywhere, so this is not something you need to necessarily get on a plane for. But it's always great to get out of your box, right? So I'm originally from New York, so while it was great to start in the blockchain space within New York, but the contribution that I get to my own psyche, to my own understandings from different places, from different parts of the world, whether it's London, whether it's Dubai, it's completely different perspectives. And that's important for you to round yourself out. So whether you're whether you're going to Dubai, whether you're going to Singapore, some of the major hubs, as long as you're going to a major hub, you're going to get contribution from a variety of people. So people think like, okay, if I'm going to Singapore, I'm going to get that geospatial location, right? Like just that place. No, you won't. You'll get somebody from Korea coming in and somebody from Australia coming in. In Dubai, you'll get somebody from London and you'll get somebody from India coming through. So it's these major hubs. Anytime you're hitting a major hub, you're not just getting the people from there, you're getting people, 2,000-3,000 miles within that vicinity. And it's a good way for you to see new perspectives. If you're stuck in your business model, or your tech, it's, best thing to do is go out there and find people who may have that solution. And chances are they don't live next door, so especially within blockchain, like with Silicon Valley, you can kind of be like, okay, I'm going to knock next door and the other guy will know what needs to be done, but not in blockchain. In blockchain, you're going to have to make you're gonna have to, at some point you're gonna have to make the airplane a part of your transportation network, because that's just the nature of the beast. That's just the nature of blockchain. So it's important to do that, to be able to hit the conferences so you can get an idea of what's going on, and they're always occurring. So it's not that hard to hit one. You just have to look in a certain direction and there's something amazing going on.
Yeah, I see. Probably you are the speaker on so many events, so you don't want to mention some of the
Yeah, I can't.
particulars, so the others would be jealous that you didn't mention them.
Yes,
Uh,
because it could just be, Andre, um, it could just be an oversight, right? Like I mentioned three and I didn't mention the fourth, and then I pissed off the fourth people, and it wasn't even intentional. It's just like, oh shit, I didn't think of it at the moment. So yeah, I'd love to, but I can't, because of those reasons. But it doesn't really matter. This is the most important thing is it doesn't actually matter as long as you're hitting some of the major destinations where people come together. You will be inspired, you will make some amazing connections, and then you can use them to continue with your Lord knows, Andre, you and I have gone to some small locations for conferences, and it's always beneficial, no matter whether the event is big or small. You can meet amazing people everywhere.
yes. For me, I think that it's necessary to look at the speakers and topics, and sometimes even small meetups, they can be very effective, and even more effective, because there is always a limit of time and the limit of the number of people with whom you can speak.
Yeah, always.
Yeah.
Always. You can never cover. You can never cover all the speakers. If you sit there, also, you're missing, if you're just sitting there, I've seen people do this. They'll go to a conference and they'll just sit in the auditorium and go speaker by speaker taking notes. That's not really how this industry works. It's a very collaborative, intense industry. So if you're just going and listening to speakers and not getting out into the hallway and communicating with others, then you're also missing out. So it's kind of really hard in blockchain conferences, because you kind of want to listen to the amazing speakers, but at the same time, you kind of want to be out in the hallway to be able to talk to people with amazing innovations and ideas. So you kind of need two versions of yourself. You need one sitting in the hall in the auditorium and one doing the networking. Not possible yet, but so that's always a conundrum. But that's a good problem to have. Just imagine the opposite. Just imagine the opposite, where you're just listening to boring speakers, or you're just listening to people in the hallway who have no clue or are doing things that won't work, which is quite painful to sit through when somebody's pitching you something that isn't going to work anyway. So feel blessed. You're in the industry that there is good things happening on both sides, from the speaker side and from the networking side.
Yeah, great. And we are speaking for almost 1 hour. I know that you need to continue your way, and that was great to speak with you. And I hope to speak with you maybe in few weeks again, or a few months.
Yes.
And
well,
no matter.
I think we're at the point, Andre, where whatever's happening with blockchain will have occurred in the next few months, right? Whether we're on an upcycle or on this forking, will have kind of subsided. So it'll be good to get excited either by amazing new projects or amazing opportunities. We're kind of in a state of flux right now, where no market knows whether to go up or go down. But I think those decisions will have been made in the next few months.
Yeah, okay, great. See you. Bye.
Thank you.